Today I want to take a look at Nike. I was actually looking at it yesterday. We were in some chat rooms talking about it, and I did a post on it on Stock Twits as well, and got some feedback from that from some other people and get their opinions. Right now we've got it pulled up on the Bollinger Bands here before market open. You can see a weekly trend line that I had drawn in that's here, but really what I want to look at, again, I don't use a lot of daily trend lines, daily patterns, but I really want to kind of look at this to see what I've got going on here. I'm going to cut that wick off a little bit just to make this pattern fit a little bit better like I would like to see it on this chart. So what we can see is a lot of consolidation right through here. And we've got an inside day, a lot of indecision. It went up, it came down here, bounced up. This was really the buy point right here. But it came back down, got some indecision, inside day. Not a tremendously high volume day. Most of the high volume days were down days, which isn't really that uncommon. But we've got a pattern, a day forming right here on the daily chart that may break out. Now, the one thing I don't like on the Bollinger Band chart is we're above this 1 ATR band right here. I really do not like to buy above this band. I'd much rather see it pull back into here, then I could go long if I felt like there was a long. The trend is a little sloppy. You've got a lot of consolidation, in this area, as you can tell from the Bollinger Bands. We got an uptrend here, a pullback here, and perhaps it's going to turn back into the uptrend going up here. It's certainly a possibility. There are a lot of support areas. You've got price support here, price support here. You've got a number of Bollinger Bands supporting, and there's a weekly line. Then you got a daily daily pattern forming here. On the TTM indicator, you're showing increased momentum as it's headed back up. So there are a lot of things pointing to a continued move up. Let's take a look and see what we've got on our other charts. This is our wave indicator, and honestly, we've got the same thing. I'd rather see it back in the wave, but it is a little bit closer to the top of the wave here, which is a buy area right here in the first part of this wave. Anywhere in this area, it would be a buy area. So when you look at this particular indicator, it's a little clearer that this might be a buy than it is on the Bollinger Band, which gives you some concerns that it may be already too late to buy and you need to wait for a pullback. RSI looks good, not a big deal there. There is room to move up if it needs to. Ideally, I'd rather see it in the lower half, but it can certainly move up from here. You can see back in here where it had consolidated and then headed back up, consolidated and headed back up. So, it's certainly possible. One thing I will notice, I don't talk about this a lot in my trades, but you got a little bit of divergence here. This, I think, is just slightly lower than this, and this high was higher. So you've got a line up here, and you got a line down here. So that's RSI divergence, which would typically indicate that the stock is going to fail, which is exactly what it did. So you got a little bit of a warning that was going to happen, looking at the RSI back here. It can be a little difficult to trade this. I typically would use options if I was going to trade it. That's not where we are today. Today we're trying to see if we've got a buy that we can do something with today. Let's take a look at our last chart, which are moving averages. Let's zoom in just a little bit so I can see this more clearly. Our 50-day is clearly up. Our 200 moving average is up. On all three of the EMAs are also pointed up, and there's a little bit of an extension between the 10 and the 20 here, which would kind of indicate to you that it's a little bit out of the buy zone right here. So again, it looks like a long to me, but it is out of what I would consider a good buy zone. Now that does not mean that I'm going to pass on this trade. I would actually probably take this trade. I would do it one of two ways. I would if I was going to buy the stock, I'd put a buy up here for a break of this candle, and then let's change back to the Bollinger Bands. I'd put a buy up here for the break of this candle. I probably would not put a buy above the break of this pattern because it's a little bit too far away, and I'd like to be a little more aggressive. I'd put a buy right here to go long up and at least into the two partial credits at the 2 deviation away, and maybe a target up in the 3 area, which is just below the 52-week high. It may have trouble breaking this 52-week high. That's why I suggest that. I would put my stop. If you want to be super aggressive, you can put your stop at a break of this pattern. However, what I have found is really tight stops tend to cost you more money in the long run because you get stopped out too much. So to me, the stop is going to have to be right in this area. You want to be a little bit below this price action here, which you see a lot of, even if you go back, you see a lot of support and resistance hitting this line going across. So, to me, I would want to be a little bit below that price action. That should also put me above this mean, if this mean continues up a little bit or right at the mean. So I would be looking to buy the stock at a break of this candle today. My stop would have to be down in this area. My targets would be about here and here. The other thing you could do, that I trade a lot of calendars, so you could do a 94 weekly calendar, and by weekly I would probably do either this Friday or next Friday's expiration for the short, and then about 30 to 45 days out on my long. If you're super aggressive, you could go up to a 95 or a 96. Just keep in mind the danger with a calendar is that even if you've got the direction right, let's say it does go up like we expect, if it goes up too much, even though you bought and sold call calendar, you can still lose money, because the idea for the calendar is where you take advantage of time decay, and hopefully it finishes right at your strike. That's where you make the most money. You could also lose money if it went down, but you would use the same stop. So if it hit this area down here, I would close my calendar from whatever loss or gain I had. If it heads up, you could roll the short strike, but that's why you have the long strike, 30 to 45 days away, so that you can manipulate this trade and do some rolls to try to keep the calendar going. But if it did continue up, then you're going to be at whatever max loss you're setting at after you've done your rolls. So that is one danger of the calendar. You could just simply buy a call here, or if you break of this, you could buy a call. You could be a little more aggressive and just buy it at market open. I would try to buy at the bid, try to get the lowest price you can on the call. Again, your stop would still be, in this area. If it hits here, you just sell the call, and your profit targets would be the same. You could do a diagonal where you could do a debit spread where you bought, maybe I'd probably buy the 92 and sell the 100 perhaps, maybe 60 days out. Just have to look at the price and see if it's worth it from a price standpoint, because the move we're looking for is somewhere, it's at a 93.40 here, and we're looking for a move to 94, so that's $1 to a 95, so maybe $1 to $2.50 move. So you just have to look at the price and see if the risk reward is worth it. And again, same stop. If you do decide to do a debit spread, you could also do a covered call where you go along here and perhaps sell next week's 96. I haven't looked at the premium, so I don't know if that would work or not. You have to look at the premium, see if it's worth it. You do the same thing with a diagonal. You could go ahead and buy a whichever the longest term option you can get, perhaps a March 20, you can buy that or around a Delta 95 or higher, which is probably going to be in the $60 range down here somewhere, and then you could sell the 96 on a weekly or maybe 2 weeks out. I would really recommend that on this stock because I do expect some resistance right here. I think we're going to have trouble. If anything, we're going to consolidate through here, which is one reason that perhaps buying it or buying just a call is the best option. Just be sure to get out of it when you get your profit, because consolidation is going to hurt. If you buy options, consolidation is going to hurt your position. If you buy the stock, you could hold it a little longer, move your stops up, take partial profit. You can do the same thing with the options if you buy multiple contracts, but depending on the price, you may not be able to do that. If you would, please like and subscribe to this channel and this video. Let me know if you have any questions. I think Nike's a pretty good buy in this spot right here, and I may take the trade myself later today. I've got a couple of others I need to try to get closed out, but if you have any questions, let me know. Thanks.